When I have an initial conversation with clients or their advisors, I usually begin with the following statement. There's really only two ways we can leave this life, conveniently or inconveniently. And unfortunately, most of us are going to go inconveniently, and that's expensive. People often ask me, what is long-term care? Well, the easiest way to answer that question is to explain what short-term care is. Maybe you or somebody you know was in a hospital not long ago as a result of an illness or injury. Maybe they required surgery. They may have been in the hospital for a number of days. But you ask yourself this question. How many days after the insurance company stops paying does the hospital keep you? That's an easy one. They don't. They kick you out as soon as the insurance company stops paying. So many people find themselves discharged when they're still far from ready to go back to daily life. These folks are going to need care outside the hospital setting, possibly for days, weeks, months, or perhaps even for the rest of their lives. And that is what long-term care is. Let me address the issue of what long-term care costs. Well, that really depends on the setting that the care is provided in. Many people think of nursing homes. Private room nursing home in this region currently costs over $100,000 a year. Home health care, depending upon the level of care and how many hours a week, could cost anywhere from $50,000 to well over $100,000. Assisted living falls somewhere in between. Traditional long-term care insurance is viewed by many people and their advisors as unattractive for a number of reasons. Mainly because the rates are not guaranteed, and anyone who bought long-term care insurance years ago has discovered that the rates do indeed go up, sometimes significantly. Another big drawback is what is referred to as use it or lose it. What that means is if you end up going conveniently and don't need long-term care after paying premiums for many years, the insurance company just keeps your money. Most financial advisors who work with successful high net worth clients plan on helping their clients to be in a position to self-fund the long-term care risk. It's not as though they're oblivious to the risk, it's just that they haven't seen in the past insurance as being a viable solution. Once they understand how asset-based plans work and how valuable they can be in a client's portfolio, they begin to see them as portfolio insurance. What that means is that these allow the advisor and their client the freedom and the peace of mind of knowing that no matter what happens with the rest of their assets, the long-term care risk has been funded in advance using a lot of leveraged tax-free dollars. Wouldn't it be great if you could find out in advance before you even applied for coverage what the final underwriting determination would be and therefore what the cost would be to you? Fortunately, we have the resources through a case manager who has direct access to the underwriters at the various insurance companies we work with to be able to collect the necessary health history information and to be able to get a fairly accurate determination from the underwriter as to what their decision will be before we even apply for coverage.